there is another one that I won't call because I don't trade it, where I was using technical indicators. I don't know whether you've heard of moving averages.
Yes.
The
EMS.
alligator.
Yes.
Those things, they are easiest way to lose your money. Like, they just provide you with an enabling environment
To lose money.
comfortably.
Wow.
Actually, if you have, let's say that 20,000 you'd like just to dash out, donate to the economy, you just add moving average to the chart. Like, you're going to lose it in an amazing way.
Yes.
And it's very fulfilling. Stop loss is another great enemy to traders,
Okay.
and they don't know it. Actually, stop loss helps the broker more than it helps traders. So what we want to see in our strategy is a market structure shift and a fair value gap within this range. That's all.
Yes.
That's all. So if we get a fair value gap within this range, we wait for the market to pull to the fair value
And
gap,
retest
and
it.
we enter from the fair value gap. That's basically how we trade. Like, it's so simple to work, right?
It is very simple.
But it does.
If you're in a trade right now, take a pause. If you haven't analyzed the market, don't move. This might be just what you need. This is the Mind of a Trader podcast, where we cut through the noise, focus on execution, and break down the mindset behind every move. This is where discipline meets strategy. I am your host, presenter Ali, and this is where real traders sharpen their edge. Let's get into it.
The Mind of a Trader podcast, where we outthink the market.
And of course, we are with one and only Blue Bull FX, my long-term friend, man. It's been 5 freaking months. You went missing in action, man. How are you doing?
I'm fine.
Good to see you
I'm
today.
back, bro.
Good to see you today.
Thank
Hey,
you,
how's
sir.
everything?
I'm fine. I'm doing well. Yeah, I can't complain.
Yes.
I can also see you're doing amazing.
Thank God. Yeah. So I really don't know where do we begin, but just catching up from our previous interview.
Okay.
The feedback was crazy. The feedback was amazing.
Okay.
From being a street vendor to actually right now. Do you ever remember those days?
I do, bruv. I cannot forget the chums. I remember everything. Yeah.
Wow. Amazing. So we're going to be actually doing a chart analysis. You're going to be able to tell us, how do you analyze your charts? Where do you get your entries? Where do you get how do you do your risk management? And also, how do you set your stop losses? Okay. So we are ready for the class. Let's go.
Okay. Now I'm showing you how I do my stuff.
Yes.
All right. So I have 3 approaches, and I want to break them. Can I use your board?
Yes.
So the first approach is a novice approach. Novice is
Beginner kind of.
a beginner.
Yes.
So that's the first approach. And then I have advanced level. You are going to forgive my hard writing.
It's okay, as long as we understand. Yes.
And then we have no. This is supposed to be intermediate.
Okay.
Advanced.
Okay.
Now, I trade each approach depending on 2 things. One, the nature of the market structure in that particular day. And 2, whether I want to go aggressive or not, or conservative. I'm 2 types of trader. I can be risk averse, especially if I'm trading an account that I want to sustain for a longer period
of time, yes.
But there is an account that kuna ile, even if you lose that account, you just breathe once.
Let's continue. Amazing. I get it.
Now, so I am risk averse, risk aggressive as well. Now, novice level, I do what we call pure price action.
Okay.
And not the double tops, double bottoms. I don't do those things. I actually don't believe they work in the first place. And I combine this with an SMC approach. Okay.
Yes.
So here, these 2, they give me a basic market entry, relying on the trend reversal for ICT 2022 model.
Wow.
Okay.
That is for the novice.
This is the novice.
That is the beginner.
This is my beginner approach.
Yes, yes.
Okay. There is another one that I won't call because I don't trade it, where I was using technical indicators. I don't know whether you've heard of moving averages.
Yes, yes, yes.
The
EMS.
alligator.
Yes, yes.
Those things, they are easiest way to lose your money. Like, they just provide you with an enabling environment
To lose money.
to lose money comfortably.
Wow.
Actually, if you have, let's say that 20,000 you'd like just to dash out, donate to the economy, you just add moving average to the chart. Like, you're going to lose it in an amazing way.
Yes, yes.
And it's very fulfilling.
For someone who wanted to lose.
Exactly. Now, at the intermediate level,
Okay.
we explore an approach that we call VSA. And now VSA is called volume spread analysis.
Okay.
Now, volume spread analysis means we are looking at the volume of the price versus the candlestick price action. The nature of the candlesticks that are printing.
Yes, yes.
Can I explain, please?
Yes, yes.
What we are calling spread in this case is not the variation between the BD price and the ask price.
Yes, yes.
Okay, that is the normal definition of spread. Now, our spread in VSA is the discrepancy between the opening price and the closing price of the market.
Yes, yes.
So where the market opened and where it closed, because that is where it gives us the body of the candlesticks. And we are trying to see, is the body forming aligning to what we have in the volume.
Yes.
So if we have body becoming small and then the volume is increasing, it's a possible smart money manipulation.
Okay.
And so we are looking for a divergence.
Yes.
So that divergence can signify a long-term reversal.
Wow.
Okay.
Okay.
But when we have also the vice versa of that, we have a very big candle and the momentum is low. Also, that's another red flag. So we raise eyebrows to counter check. Might we be having something interested to check?
Okay.
Now, advanced level, I combine now the VSA with Elliott wave theory. Now, Elliott wave theory is actually, it's a pure price action strategy. But now, this particular approach relies on the thinking that the market moves in a repetitive, predictable cycles called waves. Okay, I want to explain that briefly.
Yes, yes.
Now, this particular approach relies on the thinking that the market moves in a repetitive, predictable cycles, and each cycle gives us a wave. And there are guidelines and principles that govern the formation of that candlesticks.
Yes.
There are three. One says wave 1 should not go beyond the start of wave 2. Wave 2 should not retrace beyond the start of wave 1. The second principle states wave 3 cannot be the shortest wave. And the third principle states that wave 4 should not enter the price territory of wave 1. So that is a little bit much more advanced.
Yes.
Okay.
Yes.
And then I combine now this volume spread analysis, and then I combine now these two SMC.
Yes, yes.
So this one gives me now my advanced analytical prowess to capture long-term trends with a little bit more aggressive approach. So now, which one do you want me to expound on?
Just before I answer that, I want to understand. So in the intermediate, there is no SMC,
No.
There's no SMC.
No.
Okay.
My intermediate, we rely on this fully.
Okay.
We fully rely on this,
Yes.
and maybe a little bit of checking the volume profiles. Yeah.
Okay.
Want to see the order book, or we want to know where do we have aggressive buyers, aggressive sellers, and all that.
Okay.
Yeah.
So what we are actually going to do right now, because we have Blue Bull FX, and he's actually been able to tell us he has a novice strategy, intermediate, and advanced. We have many people who are novice. Is it novice or novice?
Novice.
It's novice. Okay. We have many people who are novice. So we're going to begin with that strategy for today. And then if you guys want him to come back again and do the intermediate, do the advanced, just comment the word advanced, the word intermediate, and I'm going to make sure that in a few weeks, you're going to see him in the Mind of a Trader podcast. So let's go.
Well, don't call them novice next time, although that's what I call them. Call them ambitious experts.
Ambitious experts. Interesting.
They really want to be advanced,
Yes,
but
yes.
it's a matter of time.
Yes.
And also, these things I did not learn overnight. This is my 6th year trading in financial market.
Yes.
I've woken up every day, Monday to Friday, for the last 5 years. 6 years. This is my 6th year doing
Yes,
this same stuff.
Yes.
Okay.
Yeah.
Well, so we start with the novice.
Yes.
All right. Okay. Now, when you talk about novice entry, this is the easiest way because number
So we're
one.
going to start here and then we'll move in the charts
Yeah,
later.
I'll show you from the
Okay,
charts.
okay.
So what we want to see is two things. One, we want to see a market structure shift.
Market structure shift.
It's also called a change of character.
Oh, the church.
Yeah. Ali. So a change of
Character.
that is the first thing we want to see.
Yes.
Okay. The second thing we want to see is internal range liquidity.
Yes.
Okay.
Okay.
Let me explain this.
Yes.
We have two types of liquidities. What do you think is liquidity, Ali?
I remember when I started, people were telling me I am the liquidity.
So you are the liquidity. Guys, liquidity is presenter, Ali. And then the other beginner. Oh, no,
Yes,
let me
yes.
explain. Now, liquidity in this context, okay?
Yes.
If we have a market which is ranging,
Okay.
these highs are called old highs. They are one of the 7 institutional reference points. Then these lows are called old lows. So support and resistance traders. Have you ever heard people trading support and resistance?
Yes.
It's the world's most useless strategy.
Wow.
Okay, Ali, the most fulfilling way to lose money is trading support and resistance. Like, bank this. It's so easy to work. Anyway, let me break it down.
Yes.
You see, if you are trading support and resistance, is this a support or the resistance? So this is where there is support.
Yes.
isn't it?
Yes.
So you are going to buy here.
Yes.
When you buy here, you put your stop loss
Below.
below the previous low.
Yes.
And then you are targeting
The
that
resistance.
high. Isn't it?
Yes.
So this your stop loss. The smart money are aware.
They know that you're doing that.
That's what you are doing.
Yes.
Above here, if you are selling at this point. You are putting your stop loss.
Above there.
So these stop loss are basically liquidity pools.
Yes.
You see? In other words,
They need your money to move that market.
in other words, liquidity are buy stops and sell stops.
Crazy to think about it.
Because if you are buying here,
Yes.
it means you are anticipating the market should stop selling at this point.
Yes.
For you not to continue losing.
Yes,
So
yes.
this for you is a sell stop.
Yes.
To stop this selling momentum.
Yes.
So this sell stop is a liquidity. And the smart money are aware of the same.
Yes.
Basically, the market is in 3 dimensions. The first one is when we go creating a series of higher highs and higher lows. This is very basic concept.
Yes.
So this, when the market moves above the previous swing point, it gives us a BOS, a break of structure.
Yeah.
Another break of structure, okay? And another break of.
Structure.
Now, if the first time we trade below the swing low here,
Yes.
now this is what we call
Change of character.
change of character, also called the market structure shift, meaning the market has shifted its structure.
Yes.
So our strategy is very simple, Ali. We want to see an internal range liquidity. Now, I explained that the one that I explained to you is called external range liquidity. Internal range liquidity is 3 things. It's either an order block, a liquidity void, or a fair value gap.
Please explain them.
Now, a liquidity void is when the market is inefficient of one market bias.
Okay.
For example, have you seen market candlestick? Those are raising, they are just going up, and there is no selling pressure.
Yes.
A perfect market condition is characterized by both buyers and sellers.
Yes.
So at any point, you have only one category of the market participants or market character dominating the market. That market is inefficient of the corresponding market characters.
Yes.
For example, we talk of CB and the BC. CB, side imbalances. Because when the market is moving, it's creating those huge fair value gaps.
Yes,
They are
yes.
called imbalances. So sell side imbalances results to buy side inefficiencies, meaning if the market is just selling throughout, it is inefficient of buyers.
Okay.
And the buy side in imbalances results to sell side inefficiencies, meaning if the market is only buying throughout, it is not sufficient, it's inefficient of selling pressure.
Yes,
And
yes.
we want that buy, sell, buy, sell, buy, sell, because that is what, it's like when you are supplying clothes, but you don't have people to buy.
Yes.
It's a bad business, right?
Yes, yes.
So that is what we call a liquidity void.
Yes.
A fair value gap is an imbalance in price delivery. Okay, in price action. There is a difference between an imbalance in price delivery and an imbalance in price action.
Okay.
An imbalance in price action is now the liquidity void.
Yes, yes.
But now when we have 3 candlestick pattern and then the candlestick at the middle, assume that's a candlestick, another candlestick, right? And then these candlesticks as wicks. So the gap between this candlestick, the gap between this candlestick and this candlestick, this gap is what we call fair value.
Gap.
And it's a sort of external range. What we are meaning is, where do we find this mostly? If you find a fair value gap there, Sindio, you can see this particular movement, market is going up front. So if you are waiting for this market to come to this particular range, it means you put your stop loss up there down, right?
Yes, yes.
So if you are putting your stop loss uku, because this is where you are buying from, the implication to that is that now this is liquidity, but it's internal because it's within specific, unlike the
Yes.
other one which was just above or below. So now that's how we get internal range
Wow.
liquidity.
Okay.
Are you understanding, Ali?
I'm understanding.
Exactly. Yeah, so that's basically the approach. So what we want to see is those 3 things, either a fair value gap, an order block, or a liquidity void. Now, based on what we are talking about here, let me highlight this one. So what we want to see in our strategy is a market structure shift and a fair value gap within this range. That's all.
Yes.
That's all. So if we get a fair value gap within this range, we wait for the market to pull to the fair value
And
gap
retest
and
it.
we enter from the fair value gap. That's basically how we trade. Like, it's so simple to work, right?
It is very simple.
But it does. So in other words, a market structure shift to the downside and a pull back to a fair value gap, and then our stop loss below the high, and then target the previous low.
Let me see. Let me see if I get it. So the market changes.
Yes.
So if the market is changing, the trend is changing, basically means we have a candle, a red candle that has closed below this line, right? Right? Then what will happen is another candle will form here, right? Sawa? Then we take this position.
Exactly.
Okay? We wait for this market to come
To that
and
zone.
retest this
Yeah,
zone.
and then you, yeah.
Then the candle that closes here, that's where we take the sell.
Yeah.
Nimeelewa?
Yeah, it's almost the same. Okay. The only issue is you are taking from the candle, we
Okay.
will talk from the fair value gap.
Or you'll take from the fair,
yes.
not here.
You don't sell a market when it's selling early.
Okay. Thank
Okay?
you. Thank
You don't enter the direction of the market.
Yes. Did you capture that, Rahman? Okay, thank you.
You don't buy on a buying market.
Okay.
I told you the greatest lie in the contemporary forex market space is that the trend is your friend.
Yes.
I'm here to confirm you that the trend is your greatest enemy.
Okay.
By design, by status, by everything. Because the market is designed to work against to the beginners. Have you ever asked yourself, when beginners buy, the market sells? When they sell, it buys. You think it's a coincidence?
You think the market
It's not a
knows you.
coincidence.
Yes.
It's not a coincidence. Because beginners want to see market, it has started going at a specific direction, they join it in that direction. That direction is a lie. Actually, if you see a market moving, selling aggressively, you should be looking for possible places where it's going to reverse from. always reversal traders wins every time over, how do we call these other ones? Of
Trend chasers.
trend chasers.
Yes,
Never
yes.
change the trend.
Wow.
Never. Because if you change the trend can change.
Okay.
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 Yeah.
Interesting. Now, let's just get back here.
Okay.
I'm going to wipe mine. It's not as important, guys. But I just wanted to see, because those are some of the things I've seen in the market. So I just wanted to see if it makes sense. Let's get now to the entry at the fair value gap.
Okay.
Yes.
Entry at the fair value gap.
Yes.
So when you enter at the fair value gap, two things. Stop loss.
Okay.
You see, 90% of the information available online, it's misleading. I pray this won't. Now, stop loss is another great enemy to traders,
Okay.
and they don't know it. Actually, stop loss helps the broker more than it helps traders.
Wow.
That's because when a broker makes money when you open a trade or you close. When you open a trade and close, of course, the next temptation is to open another trade.
Yes, yes.
So it is the aim of the broker to make sure that you keep on closing your trades and
Opening new ones.
Yeah, new ones, because that's the only place they get
Yes.
that variation between the bid and ask price.
Yes, yes.
Now, if you want to set a stop loss well, you don't set it. Now, let me explain.
Interesting.
Let me explain. These are things I've done for 6 years.
Yes, yes.
I have lost so many trades. I've hit so many stop losses in life. I stand in the best chance to advise this from experience. I told you we have rational and empirical experience and knowledge. My knowledge is purely from market experience.
Yes.
Stop loss, hey, goodness. Stop loss, most of the time, if a market comes to this zone, this is the fair value gap. Smart money.
Know that.
Do you know we are talking about people with masters, people with PhDs in market microeconomics, and they don't sleep studying how to make you lose.
Okay.
You think JP Morgan's, those guys, crazy.
Yes.
Those are people with advanced 30 years of experience in specifically learning how to make you lose. You cannot just be casual, wake up casually from a bed sitter somewhere in Risambo, and it's not going to work. Because you are competing, you want to take money from extremely smart individuals.
Yes, yes.
So what you're going to do is, don't put the stop loss on the MT5. What you do is, you see where your point of interest is this one. If you put your stop loss here, what will the market do? It might come, hit the stop loss, still reject with a wick and reverse.
Yes.
Okay.
Yes, yes.
Stop loss, you put it at your entry.
Okay.
How do you do that? Wait for the market to play out from your zone.
Yes.
You're already in playing with losses.
Yes, yes.
It will surpass that zone, 90% chances. And then if it was a valid point of interest, it will reject it with a wick. So all other people have been stopped out. Okay, but
Yes,
you are still in the trade.
Yes,
this is
yes.
survival tactic.
Yes.
You are still in the trade, although you suffered some losses and you were a little bit nervous because you had no stop loss. Them, they had no stress because we have a stop loss. But by the time they come, you have already hit the stop loss. And now after the stop loss is hit, you see the market going your direction.
Yes.
So many people will confirm to you, even in the comment section, if you post this video, that the market stops them out and goes their direction. It just blew my account and then it is stopped, and it's not a coincidence. So you need to understand, if you put that stop loss there, it's going to be hit 90% chances. So what you're going to do is avoid it first, but no, this is my entry point. If it closes above your fair value gap with a body, exit manually.
Okay.
If the candlestick, if it's a 15 minutes candle, closes with a body, exit manually.
That means it was a fake breakout.
It's a fake breakout.
Yes.
If it breaks with a body, exit. If it closes with a wick, wait for the next candle and put your stop loss exactly at your entry. Make sure you are risking zero.
Wow. That is genius.
Yeah. That's how I do it myself. I don't know about the rest. And
And do you trail your stop loss?
No, I don't. I don't. Actually,
Because I feel like the market does, these kinds of
if it
movements.
comes coming and giving, if you put your stop loss somewhere, leave it. Okay? If you are risking 10 pips, my stop loss is never beyond 20. See, you saw my trade, man.
Yes.
And I don't hold even for more than 30 minutes.
Yes.
My stop loss is always 10 to 15 pips from my entry. Okay?
Yes.
That's because I just want to give a little space from where my market played out, just in case it decides to revisit that array. But ideally, 98% of break evens are taken out.
Again.
Yeah.
Okay.
In other
This
words,
is interesting.
if you put a break even, forget about that money.
It's going to be hit.
It's coming to take the break even, I promise. It's gonna revisit.
Wow.
Under most cases, or you just trail above, you say now I'm risking 70, and now let's say you have $700, and then you trail the stop loss, you secure 350. If you want to close partially, you can minimize in MT4 or MT5, you can minimize the lot size to close partials. Don't close partials by the trail, because if you trail, it's like the money that it's already above there, you don't want it, honestly. It's going to come back, eat all the money, and then take you. So it will just lock the 350 USD. I highly recommend you close your trades. If you feel whatever you have, it's enough. If the market has played out, just close, man.
Let's talk about those partial clauses.
Okay.
And I'm going to just take, in terms of percentage,
Okay.
let's assume we haven't yet gotten at the TP1, TP2, and TP3. Do you have a percentage you would recommend for this? Maybe once your TP1 is hit, maybe 60, 30, 10, I don't know. Do you have something you'd recommend for that?
No, but what I have is, according to me, my first TP is always 50% of the total profit.
Okay.
So if I'm looking for $2,000, my first TP should be 1K.
Okay.
Okay. Then that other one now
You
but again,
divide it
you see
here.
what guides take profits. They are not set casually depending on what you're anticipating.
Yes.
They are set on specific zones.
Zones, yeah.
In case it breaks here, the next one. In case it breaks here,
the next one.
So what guides TP is not what you're anticipating to make. It's the structure of the market.
Yes.
You cannot just set a TP and this is the amount of money I want. I want. No, that's not how it works. It has to be defined by the market dynamics, like how is the structure looking like? Where do we have our key zones, which might be a possible reversal. So you put your stop loss there, just not stop loss, but take profit, just to make sure if it surpasses, it's fine. If it doesn't, at least it has secured something for you before it.
Okay.
Yeah.
Would this be good zones for take profits?
The what? These particular key areas. Yes.
Right?
If it revisits, if you were buying here,
no, the market is now selling.
market is selling.
Yes.
You see these zones
Yeah.
are very key. There is something we call MMM. This is market maker models.
Yes.
Now, every market, I want you to look at gold market. It has this structure.
Okay.
It should be, the algo should be engineered in a way, most of the time, if you cut this perpendicularly and merge these two, should almost
be the same thing.
Yeah, I'm going to show you that. So that's basically how it is. So these zones are another reversal zones because they are demand zones.
Yes.
So these are demand zone again. So if the market revisit a demand, it will go up. If it revisit a demand, it will go up. So these should be your take profit zones.
Okay.
Yeah. That is in case now you are holding something long term.
Okay.
Yeah.
Interesting. Wow. I think today we've actually gotten to learn so much from BLUEBULL, and you've actually changed, I'm sure you've actually changed most people's perspective, including mine. Are we ready to get into the charts now?
Yes.
Wow. Guys, let's go. Now, let's get into the charts so that you can explain this now.
Okay.
In a way that people can get to understand.
Okay.
Yes.
Now, that's actually very easy. of course, we are doing the novice approach, if I can remember very well. So how my novice approach basically works is I want to see specific price action printout, and then I respond to that particular price action. For example, if I see a market moving upwards,
Okay.
it's forming a series of higher highs and higher lows, right?
Okay. Yes.
It implies that it's on an uptrend. Then I want to see the market change its character for the first time.
Yes.
That is to mean, if we have to label here, we would label this as a break of structure. All right. This is B or S. Oh my goodness, just apologies for that. Kidogo tu. Want text. Assume this is B or S.
Okay.
And BOS basically means a break of structure, right? So we can decide to clone that also for this one. It's another break of structure at this particular point. Okay. Then when we see this kind of price action, we want to experience a market structure shift at this particular point. All right. So this is what we call MSS. Now, MSS means change of character, like the market has changed from being bullish now to bearish.
Bearish, yes,
okay.
yes.
So if I see that kind of a model, there is one thing I want to do. I want to see a market pull back to an internal range liquidity.
Okay.
Internal range liquidity is in 3 dimensions. Is in one, a fair value gap, which is an imbalance in price delivery, or 2, it is in a liquidity void, which is a market movement, which is void or which is full of inefficiencies. If you allow me, I can explain.
Yes, yes.
If we have a market moving from this particular point to this particular point, you can see it's only buy momentum dominating the market. This is another case study. So this market is void of sellers because it's full of buyers.
Yes, yes, yes.
So if the buyers are the ones who are in control of the market, it implies that that is an inefficient market price action. We talk of 2 concepts, which I don't know whether I talked about last time. We have CB.
Yes, yes, and BC.
And BC.
Yes, yes.
So CB means sell side imbalances, because an imbalance is a fair value gap. Of course, if this market has to move like this, it has to leave imbalances or fair value gaps at any point, right? That's an imbalance. Can you see? So these are what we call fair value gaps or imbalances, like this kind of a price action. Also this one.
Yes, yes.
Everywhere we have a void, just know that we experience some kind of a price action which is not wanted. Now, sell side imbalance, if now this was to the downside, could result to buy side inefficiencies. Because now is now on an uptrend, we'll say that buy side imbalances, BC, buy side imbalances results to sell side inefficiencies. Now,
so what I'm getting is when we are on an uptrend, we have sell side imbalance.
We have buy side imbalance resorting to sell side inefficiencies. Yeah, this means when the market is inefficient, we do not have sufficient sellers. We have only buyers dominating the market.
Yes.
And that's not a healthy price action.
Yes.
By design, by starters, right? Now,
so to make it just easy for someone or simple for someone who's watching this, it's saying when there are a lot of buyers in the market that is in an uptrend, we have, it just means that there is the market is inefficient because there is inadequate sellers.
And exactly. Hey,
right?
Bravo, you're a genius.
Thank you.
Now, that's it.
Yes, yes.
So now, this is what we call a liquidity void.
Thank you.
That market is void of liquidity. Okay. Now, the other one, or another form of internal range liquidity is an order block. And this is where massive transactions happened, and they are characterized by the last candle to print before an impulsive move that should lead to one, a break of structure or a market structure shift. Now, in this case, we want to look for a fair value gap as the most efficient point of interest. And this is because when we are ascertaining something we call PDRA, which means premium and discount arrangement, in the order of preference, we would choose to trade more from an order block when we are in the how do we call it, the premium side, then we would choose to trade from a fair value gap. Yes. But under this context, a fair value gap is the most viable point of interest. So
okay.
what you, yes?
Just using candle. I'm really sorry for interrupting.
Okay.
Just using candles, just draw them using the rectangle tool,
okay.
so that someone who's watching this can actually get to understand
okay.
how a fair value gap looks like.
All right.
Thank you.
So a fair value gap, for example, assume that's a candlestick. You will forgive my symmetry. In case it does not align in terms of sizes. But I want to show you two price actions so that you can be able to relate easily.
Yes, yes.
Okay. So this is what we call a fair value gap, Ali. Look at those candles. Those are 3 candlestick price action, right? Assume they have wick. From the basic anatomy of Japanese candlestick, we know it has a wick, it has a body, it has opening, and it has closing, right?
Yes, yes.
So now these are wicks. All right?
Yes.
These are wicks. So whenever we have these wicks, we want to have another price action here. Let me show you. I'm doing all this to try to show you what is a fair value gap in a practical sense.
Yes, yes.
Now, see the difference between these candlesticks. Oh my goodness.
It's okay.
See the difference between these 2 candlesticks? So if we have to have wicks in these candles as well, apologies, the wicks are not proportionate. I'm not very good at art.
You're good at making money.
Arguably. All right. Then that's kind of the movement.
Okay.
Okay, assuming now those are wicks. So, Ali,
yes.
If you look at these 2 price action, assuming this is price action A, and this is price action B, the one in this other side. In price action A, if you look at those particular candlesticks, there is a space or a gap in between the first and the third candlestick in this row. Okay, so the candlestick at the middle has a gap in between, and this gap is that particular space in between there.
Yes,
can you see
without
that?
it goes through the
without touching necessarily touching the 2.
Yes, yes.
The other one, if you draw the same thing, you are going to have all the candlesticks touched. Why? Because there is no fair value gap between these candlesticks. They are fully interjecting each other.
Yes.
So this fair value gap can never be, because it is an imbalance, and all imbalances must be filled.
Yes.
Okay, the market does not leave any stone unturned.
Yes, yes.
Okay, so it has to visit that particular fair value gap at some point quite often. So this is now what we are calling the external range and the internal range liquidity.
Yes,
so in this particular, within this particular range, we want to see a fair value gap and then wait patiently for the market to retrace.
Yes.
Wait patiently for the market to retrace to our fair value gap, and then that is where our entry gonna be. This is the simplest, like you don't need to study rocket science. Brav. The easiest way to trade Forex. How can I explain this? This, you don't need a lot of information. For any beginner,
you need to
like,
look at it.
It's so simple, like it looks so simple to work. So at this point, you want to see a short position there. Okay, you can have your stop loss just above your point of interest, and then probably target the previous low, or a 1:2 or a 1:3. Now, I want to see this in a chart. All right, I'm happy enough. At least we have a reply. Now, see this kind of a price action. I had seen such somewhere. So the markets are playing out here. We have something very interesting. If you zoom in, this is 15 minutes time frame, XIU USD. We have a market structure shift. Can you see we have a market structure shift?
Yes, yes.
You can see the market structure shift, right? How is it visible from the 30 minutes? Just a minute. No, it's not there in the 30 minutes. Let me show you how easy this is. And you know what, Ali? You don't need to be like, take a lot of time to read this. because there is an indicator to help you see where we have all these things playing out. All right, now it's here, okay? So allow me to reply this one, just a minute. Let me show you the one that I'm gonna reply, because I also enjoyed that particular entry back then. Where is the reply back? Okay, this one. I want you to see what happens here, presenter.
Yes.
Can you see that? So assume the market is there.
Yes.
I'm going to show you how this strategy works. Then we move, and by the grace of our Lord Jesus Christ, we have a market structure shift.
Yes.
Right?
I got it.
Then there is a fair value gap
Yes.
in between those particular candles,
Yes.
as you can see there. So what do you want to see? Just wait a minute. Let's zoom it out. So in between this candle and this candle is this particular fair value gap here. Okay. Can you see that FVG? So the market retraced from the market structure shift, the same structure I did drawn, went back to the fair value gap, and then this is where we collected our entry for a short position.
Wow.
There, and then our stop loss should just be above that particular place, and then we target 1:3. So that's a perfect entry. Let's see whether we hit the 1:3, and as you can see, that reply, we hit our take profit easily. Like, it's not rocket science. This is the easiest, arguably novice strategy. Like, for any beginner, man, it works like magic.
Wow.
Yeah. So if you want to see all these things like the order block, the fair value gap, you come to the indicators tab and search ICT concepts by Lux Algo. It's one of the indicators I put kitambo, like in 2023 or something. ICT concepts by Lux Algo. Use this indicator. It's gonna delineate for you where we have an order block, where we have fair value gap, where we have a market structure shift, and it becomes so easy for you.
Okay.
Yes, sir.
So what does it work on all time frames?
Yes. It's a market algo. You see, market is fractal in nature. What happens in bigger time frames gonna replicate in smaller time frame. The only problem with the smaller time frame is the smaller you narrow, the noisier the market becomes. Yeah.
Interesting.
Yes, sir.
And let me just get to understand this. There's something you mentioned to me about whatever is happening this side also happening
In that other side.
Let's talk about it.
See, you can see this movement is a liquidity void.
Yes.
Can you see this movement from this particular point? Market went being dominated fully by buyers. So what is happening right now?
Market being
We end to
dominated
cover
by
this.
sellers.
In a way, if you pick an horizontal ray here, and then you divide these two like that, they should almost merge. Okay, not necessarily like almost, but let me show you a better example. If we zoom out,
Like this one?
maybe to, let me show you, to a bigger time frame. Let's go even to H1, H4. Let me show you how easy this is. It's not loading. All right. Whatever we are talking about early is how the market is engineered, what we call the market algo. If you see this movement goes all the way up to that particular zone, then it has to come, and in a way, if you cut this perpendicularly, you will merge this and this. And then it drops to cover this particular void. So even if it's doing the opposite, you can see this is a sell to the downside. If you pick a vertical ray here, this is basically what we call algo engineering. How is the market algo engineered? It's not a coincidence that the candlesticks are milking people dry in all markets. In crypto, you are being chewed. It's not a coincidence. There must be a specific sequence and pattern that this particular market maker uses. Because binary candlesticks, forex candlesticks, futures candlesticks, why are they claiming people left, right, and center? It's because there is a pattern that they use, which is not a coincidence. So if you merge this and this, it's almost forming the same thing. Why?
Yes.
Because this is a complete market maker buy model. Then we have a sell model. I taught you about triple M. market maker, buy model, market maker, sell model. So that happens almost all the time, but it is not what informs our entry model as BLUEBULL. Yeah.
Wow.
Yes, sir.
This is quite an eye opener. I believe that if you're watching this at home, you've got to get to understand this strategy. It's actually been made as simple as it can ever be made.
Yeah. It's about simplifying complex things.
When did you learn this?
Not complicating. This is the first strategy I learned from my mentor.
Okay.
After using indicators for like 2 years, blowing constantly.
So you are just using indicators
MACD.
aimlessly.
That your MACD, moving average, RSI, parabolic SAR, they provide an enabling environment to lose your money. Okay, the easiest way to lose your money honorably is by having moving average in your chart. Okay, you lose and you feel the fulfillment. Oh my God, I'm losing. It's very fulfilling. Yeah. So if you want to lose, like you have some $50,000 somewhere, you feel the economy is not doing so well, let me just donate this money to the. So the best way to donate that money to people you don't know is by using a relative vigor index, Ichimoku. Have you ever heard of Ichimoku cloud?
Yes.
Mention the name, bro. Ichimoku.
Chimoku.
It sells hopelessness, despair, problems, poverty, venom, malignance. It's a bad idea.
Yes.
So that is why I adopt this particular approach that does not rely on those technical indicators that backdate to time. A good indicator should be able to lead you to what market will do, not what the market has done, because you are paid for predicting the overall bias, that my direction that the market gonna take, not yeah.
Wow. And what are some of the sources that you could recommend someone to get to understand this strategy deeper?
I would recommend you to study ICT Trend Reversals 2022. And for you also to be able to be disciplined enough to wait for this, you need to read a lot of books. I'm an author. I've written an amazing book called The Order Flow Code. I highly recommend you read that. It's a must read for any beginner who wants to understand Forex within a very short period of time. It's called The Order Flow Code. Okay. There is another book called Trading in the Zone. There is another book called The Naked Forex. But among all my favorite book is called The Alchemy of Finance. It's written by George Soros, one of the greatest traders in the Forex market space. Yeah. Yeah.
Okay. How long would you say it took you to just grasp this strategy?
No, this one because the course that I enrolled from my mentor back then was supposed to be 8 weeks. We started with this one, and I discovered she does not use those other complex stuff. So I paid a lot of attention to this. Although I could get setups for long term, because these are trend reversal strategy, and be not confident enough to enter. So she would most of the time give me the signal, now let's buy, let's sell. But I discovered that's not sustainable in the long run, because sometimes I would wake up, I feel I need to trade. She says, I'm out of the market.
I'm tired.
Yeah. So I discovered I need my own approach of doing things. That was back in around 2021, September. Yeah.
Wow. Amazing. Now, I hope you guys have actually got to understand this strategy. He's tried, I think he's actually tried his best, and I've also tried my best to actually make him simplify it, because at the end of the day, we have many beginners watching this. And if you want to see him in the next episode doing the intermediate strategy, please comment the word intermediate. If you want to see him coming again and doing the advanced strategy, just comment the word strategy, and I'll make sure I drag him to this studio to actually show us that amazing, the intermediate and the advanced strategy. Personally, I really can't wait. This is incredible. This is just amazing, and it's also been an eye opener for me. I've had a few guys who I've talked to who are actually using the same. For example, today I showed you Odipo.
Yeah.
You remember? The one who had sent me like a very long...
Sure.
Yeah, that was like some genius stuff. There's another guy. I won't mention him, but he knows he's gonna watch this. We talk a lot, on Telegram because we've also built a very big community on Telegram.
wow,
Yeah, so
amazing.
you guys can also check us out on Telegram. The link is in my description. Where can they find you?
Do they really need to find me? Okay. I think it's so necessary though. But they can find me through, I'm on TikTok, BLUEBULL Forex. I'm on Instagram, BLUEBULL Forex. I have a website where I also share my investor password. People can be able to track the live performance. For those who want to copy my trades, because I offer copy trading platform in real time. So you can go and check through my website, which is at www.bluebullforexhub.com. Or you can find me at my home place. You can also find me through my number, which is plus 254 794 254 794 414 669. So
Wow.
I think that's the places that you're gonna find me.
Wow.
Yeah.
Thank you so much, BLUEBULL.
I'm also on YouTube.
Yes.
I share these on YouTube. So you guys, but it's very discouraging, bro.
Why?
You post a video, 48 hours, 32 views. All right. Anyway.
Guys, go subscribe to his
So you
YouTube
guys go
channel.
and subscribe to my YouTube channel at BLUEBULL Forex Hub, and let's continue doing this.
Wow, that's amazing. And before I forget, let me also mention that we will be holding the biggest forex trading seminar in Dubai on 5th of October at Conrad Hotel in Dubai. That is just along
Why the street?
Sheikh Zayed Road. When you've been to Dubai, it's easy to mention these
I know.
roads. Yeah.
Habibi,
Come
we are
to
coming.
Dubai. Yes.
We are
So
coming to
if you're in Dubai, if you have someone who's watching this and you know that they are from Dubai or they are Kenyans living in Dubai, please share this with them. 5th October, presenter Ali, DDFX, and of course, BLUEBULL.
I'll be there.
Yes.
Habibi.
Thank you so much.
Exactly.
The video has been proudly sponsored by Zalance Markets. They are the broker that I do personally recommend that you can trade with. They are the most affordable traders to trade with. They are giving you institution-like trading structures. Imagine trading with RAW plus 3.
What?
Yes.
That's massive.
RAW plus 3.
Others are going for RAW
RAW plus
7.
8, plus 10. Yeah.
Do they charge commission, or it's just that spread?
When you get zero spreads, it's only $3 commission.
Okay, for zero spread.
Yes.
Okay.
And the other spreads for the standard account, they are very tight.
And they don't do stop loss hunting.
No markup.
Tumechoka. Anyway, it's okay, guys.
Thank you so much, guys, for watching these videos. I've been your host, presenter Alin. I've been with one and only BLUEBULL FX. This has been the Mind of a Trader podcast. I'll see you guys in the next episode. If you're in a trade right now, take a pause. If you haven't analyzed the market, don't move. This might be just what you need.